Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about these headlines or these things that are happening in step, pretty much, which is triggering people to talk about a recession or a depression, possibly later down the road, with the things that have happened in the recent weeks with quote unquote, I should say, bank failures, bank takeovers, banks helping other banks to make sure that if there was this thing called a run, that they'll be okay and they'll have enough cash on hand. And so, if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. Okay, so I'm not going to talk about what's going on with the financial sector or the banks. I'm just going to totally avoid that. And I'm not going to talk in depth about what the recession or a recession would look like that is looming in the dark there in the shadows, or even a possible depression that some people are saying that there could possibly be. I'm going to talk about what you need to do or what you can do to make sure that if we do start walking into that direction of a recession, that you are prepared, and what I'm currently doing in that case, so that it might not seem like a recession because we are so prepared, we were so ready for this to happen, and it's not about quote unquote making money. Okay, it's just about surviving, because that's typically what the average human will probably do when they are faced with a difficult situation like a recession, like a depression. And not saying that there's gonna be, who knows, things change every single day these days. But what you can do to kind of calculate and mitigate that risk level, assessing that risk level, and making sure that you're going to be okay. And so when it comes to cash flow, when we become these adults, you hear that saying, you got bills to pay. You got to work, right? Make sure your bills are paid. You got to survive. This is like a weird mentality that happens. Not a mentality, but a thing that comes with becoming an adult, and is making sure the bills are paid and going into survival, right? And so when we look at our budgets, when we look at our bank accounts, when we look at our financial cash flow and our emergency fund, if you don't have an emergency fund, this will probably be what it's about, is having enough set aside that in case a recession does happen. Typically people are saying keep 3 to 6 months. I'm going to extend that to a year, and make sure that if anything happens where I lose an income, at least I have a year's worth, then I'm not worried, because a year is a long time, and a year is a long time to figure things out, to make things happen. But if you have 3 weeks left of an emergency fund, or you currently have no income at all, and you have bills to pay, you have debts to pay, or you're living paycheck to paycheck, you are putting yourself in a very, very risky position, probably more risky than a growth stock, to be honest with you. And yes, I get it. There's people out there that are going to talk about, but cash loses its purchasing power and things like that. But cash now, cash for a year, can save you from selling off your assets, selling off, the house, selling off the things that you kind of need. Saves you from, cutting out certain foods, right? Because these things do happen. People, humans, myself included, we all go into survival mode and get creative around how are we going to survive. Right now, I think a lot of people are still in that position where they're thriving. They can spend luxurious, they can go finance this, they can make 4 easy payments for a MacBook, a new iPhone, a new Apple Watch, whatever it may be. But eventually that has to stop, right? We've heard things about this giant credit bubble that's happening. We've heard people, big investors, talk about how the debt levels are just super high, is what I'm trying to say. And so if you are a person with debts, you still are obligated to pay those debts. You are still obligated to make sure you have a roof on your head. You are still obligated to make sure you have clothes, to make sure you have food in your stomach, and so on and so forth. And then eventually you just start cutting things out. And usually the first thing people try to cut out is the luxurious things. Believe it or not, people will stop making car payments on their car that they took a loan out for 7 years at a 3-4% interest rate. They'll just stop it, and then they'll take the car away, and then you're done, right? You don't have a car, and that's the thing, right? It's a luxurious good, right? For me, I don't have a car payment, so that's good. Not boasting. And so try to build your emergency fund. Go and look at your finances, because it's better to be over prepared than not prepared at all in those positions for when the opportunity comes. But not even saying that this is an opportunity. I'm just saying that we shouldn't put ourselves in the position of struggling, trying to figure out what we need to do to make sure we are doing our financial obligations the next day, right? If you have 3 to 6 months worth of an emergency fund, great, you're good. I would look at extending that to a year. If we're looking at what banks do, for example, and I typically like to look at the banks and operate my finances in a similar fashion, not buying U.S. Treasury bonds, but I look at what are they doing when they see what is happening in the economy. If you know banks, if you understand what banks do, they do have a loss provisions account, or a line in their balance sheet, or they talk about how much they're putting away for loss provisions. This became public knowledge for a lot of people. It is public knowledge, but a lot of people didn't really understand it till about 2020, 2019, when banks started putting money away for bad loans. And they call them bad loans for loans that are going to get default, because they know it's going to happen. And it probably is going to happen. And so if they're putting money away, shouldn't I be putting more money away to extend my runway, just in case that a recession does come? And if it doesn't come and we're good, then I can use that money and invest it in places that will make more money, right? But in times like this, when people are, thinking of that a recession may come, it's not a time to think about investments if you don't have the cash flow, right? Don't do leveraged investing. Don't go get a margin account, because you're going to get called on it, and you'll probably lose more than what the whole value of your investment is. Try to put money away. Look at your budget. Look at the cash flow. How can you increase your cash flow? How can you decrease expenses? And how can you extend your runway to figure out if something were to happen, if you're to lose your one income or you lose both your incomes, what can you do in that year span? If you have that emergency fund, what can you do to figure it out to make things happen? If you have high debts, pay those off as soon as you possibly can. I'm talking about credit card debt. If we look at MasterCard, Visa, their balance sheets, their income sheets, way up. Financial reports, way up. I wonder why. It's because people are spending. But are they spending on luxurious goods? I don't really know. Are they spending to just survive? Possibly, right? And so if you can reduce your debts to as minimal as possible, or even just being able to service them for the rest of the year, or if something were to happen, you can still service them, then great, you're in a good position, right? And so what I am saying is, if a recession is looming, at least have your emergency fund extended to about a year. In my opinion, that's what I'm doing. I like to have a year and then never think about it again. And so that's my thoughts. Is it going to happen? Maybe. Who knows? I don't have a crystal ball. I can't tell. Can any of these other people on YouTube tell? Probably not. It is what it is. And so if you are in a position where you're fearing that a recession is coming, that we are heading into bad times, then I would consider this video and look at your finances and really make a game plan to allocate your cash to make sure that you are secure if anything were to happen. And so that's pretty much it for the video, guys. Don't forget to leave a like and subscribe, and we'll definitely see you guys in the next one. Bye.